Unfortunately, last week turned out as I expected, and the rally we were seeing was a liquidity grab followed by some very, very aggressive selling. We'll go over this, some Trump tariffs, PC numbers, bullion, crypto, and of course some lines on charts. Basically, all major indices closed in the red last week as sentiment got hit very hard by two major things: Trump and inflation. In addition, like I mentioned last time, the stock buyback window has closed and this has dried up liquidity. In addition to this, institutional investors were sitting on their hands. And just to illustrate why, I've made a short summary of what Trump has been saying on tariffs last week, and just so you can see why market participants are so uncertain. So on March 24th, he made a statement indicating that many countries might receive tariff breaks. However, by March 26th, which is 2 days after that, Trump issued several announcements with mixed signals. One declared a 25% tariff on all cars which are not manufactured in the United States, and he also emphasized that these tariffs would be permanent, and this is a bearish signal. On the same day, there was also talk of possibly reducing tariffs of China, which was seen as bullish. So conflicting messages emerged regarding reciprocal tariffs as well. One comment stated that reciprocal tariffs would be imposed on all countries, which is bearish, while another, which basically hours after that, suggested that they will be very lenient, which is bullish. And yet another comment reiterated that reciprocal tariffs would be applied to all nations. This is bearish. So additionally, tariffs on pharmaceuticals were announced, and this is another bearish development. Amid these mixed signals, it is also mentioned that people would be pleasantly surprised on April 2nd, which is a bullish note. But then, on March 27th, Trump stated that tariffs would be increased on EU and Canada if their policies worked against the United States. So this is considered bearish. So in summary, there were 5 bearish comments and 4 bullish comments, and it was noted that more such announcement might emerge over time. So probably at the time you are watching this, there will be something to add to this list. And imagine that you are a hedge fund manager. Can you justify buying in this uncertain environment? I wouldn't. So yeah, anyway, next to is the PCE. So the PCE numbers, or the Fed's preferred measure of inflation, is important because it strongly affects the market and the market's expectations for Fed's future policy. And the main problem with Friday's data was that the core PCE came at 2.8% versus an estimate of 2.7%, and the previous value was 2.6. So we also saw higher growth on the month-on-month for the core PCE, which the core PCE is the PCE without food and energy. So with this indicator pointing higher, the odds of a rate cut have started to come down, and at the time of this video, the odds of a rate cut have gone down to 30%, 13, not 30, sorry. In the current environment, this is putting pressure on stocks as rate cuts start being priced out, and there are some stagflation fears starting to be priced in. One thing to note is that despite business confidence in Fed surveys and consumer confidence in the Conference Board survey falling to a 4-year low in March, actually actual activity remains resilient. This is because durable good orders and mortgage applications are exceeding expectations. However, the longer this uncertainty persists, the greater the risk this weakness becomes entrenched. So, it's now time for some lines on charts. The first chart I would like to show you is the S&P 500. So we are close to the market close right now. So the thing I wanted to note is this bearish flag we are seeing develop on the 4-hour chart. So let me show you real quick what I'm talking about. A bearish flag is a bearish pattern which is used to indicate potentially further sell-offs. So you can see it here, it's not perfect, but so you can see it here, and the issue is that after this massive sell-off, which is about 2%, we are not seeing a bounce back, and we've also breached this support, which is at 5,600. So we could be seeing a move lower on Monday and some risk off in addition to that as we approach April 2nd. The next support is 55.24 and 5,400. So keep an eye on those. The next thing I actually wanted to talk about, I forgot. By saying this, in the S&P, the situation is quite risky. And another thing I'm following is the VIX, which is known as the volatility index or the fear index. So it is still quite elevated, and in addition to this, the credit default spreads, which are also a great indication of what is happening on the market, are still high. So do keep this in mind when trading the S&P 500, and keep your risk in check and prepare for more potential downside. So anyway, let's move to gold. When we have high risk in the markets, we tend to have some high demand for safe haven assets. We are seeing this in gold. I mentioned last time that the retest of the breach over the all-time high, which is 3,000, is considered a bullish signal, and we saw a very nice bounce exactly off this level, as you can see here, and now it's trading at 3,080 above the 3050 support. Basically this level will likely act as support, and we might see a continuation towards 3120 if Trump decides to escalate. The silver was one of the other assets we looked at. Of course, we caught the exact bottom. Now it reached 3450, correcting back to this support. Keep an eye on it. It needs to hold above this for more upside potential, and we could be seeing a move above 35, but that's to be seen, so keep an eye on this. A quick mention of the USO, which is the ETF which tracks the performance of the West Texas Intermediate. Last time we mentioned that we could be seeing a move towards 76, and we just stopped like 10 cents off of it. We do need to move above it for more upside, so this is the support I'm watching, which is at 74, and just keep an eye on it. For now, it's rather neutral. So this is the US oil, Bitcoin. So, of course, as I promised, we'll look at the biggest cryptocurrency. It got rejected from the level we set last week, and in addition to this, I want you to note this trend line, which is still holding. We could be seeing a move towards 80,000 right here, but for more upside, we do need to move above this level at 88,000. And just again, keep in mind that Bitcoin is a proxy for risk, and the more we see risk aversion, we are likely to see some more pressure on Bitcoin. The important thing is that there are some bullish signs for crypto right now, but again, risk remains elevated. So I think this covers most of the instruments for this week. Now comes the question, what to watch out for next week. And to be honest, it's a very heavy, very macro heavy week, and one of the biggest risks remains Trump and what he calls Liberation Day. So Trump has been hyping up the so-called Liberation Day when he said he will impose a round of new tariffs. His plans include reciprocal tariffs, tariffs on agricultural products and goods from Mexico and Canada. We might see Europe included as well. So, but unfortunately, you never know with him. So, best to keep risk in check and basically wait and see what he does. In addition to this, there's a slew of European data on Monday, with the focus being on the German CPI and the US Dallas Fed Manufacturing Index. On Tuesday, in addition to the Trump announcement, there's Eurozone inflation numbers and some EU manufacturing PMIs, in addition to the US JOLTS and ISM manufacturing. So definitely keep an eye on those two. Wednesday brings the US ADP employment rate, and on Thursday we will see the data for US initial jobless claims and the ISM services. And lastly, the US non-farm payrolls and average hourly earnings will be published on Friday, so this will definitely help volatility pick up, and try to have this in your calendar. Thank you and good luck.